Hi, this is the Business Guy, and we're talking about inflation, and if it's going to devastate your stock market portfolio, make it nearly impossible for first-time home buyers to become homeowners, and wipe out your retirement income. In a recent Wall Street Journal article, it said, U.S. stocks extended their losses on Wednesday with the Dow Jones Industrial Average and S&P 500 posting their steepest three-day declines in nearly 7 months, after a sharp increase in consumer prices, heightened concerns about inflation. The jump in prices was steeper than expected and exacerbated the fears that inflation could prompt the Federal Reserve to accelerate its timeline for scaling back its easy money policies. Near zero rates have buoyed demand for stocks, which have hit dozens of records since the coronavirus pandemic sent them falling early last year. Quote, not only is this just inflation and unexpected inflation a bad story for any type of real returns in your portfolio, it's also increasing uncertainty about what the Fed's next moves are going to be over the next couple of months, said Matt Forrester, Chief Investment Officer of Lockwood Advisors. So what's the truth? Is your stock market portfolio going to die a slow and painful death? Will Boston Terriers take over the world? Or is this inflation scare just a blip on the radar screen? I've really done some intensive research for this video on the history of inflation in the US and around the world. And when you watch this video all the way to the end, you'll get a pretty good idea of what will likely happen that can put you way ahead of other investors. Hi, this is the Business Guy. And if you're watching this on YouTube, please click the like button below, because the more likes I get, the more great videos I feel like making, and I'd really appreciate it. Please also share this video with others, and you can also click the subscribe button so that when more videos come out like this, you'll get notified. Let's go ahead and look at the iPad now and really see what the data reveals. So we see articles such as this one in the Wall Street Journal, Inflation Surge Rattles Market. Now let's go ahead and take a look at some history here, and we're going to look at this more in depth later. We see during the 70s and 80s, rampant inflation here, 14.5%. In the 90s, we had some inflation, about 6%. We had the global financial crisis where it went down, and now here we are today, about 4.2%. So we can see in the scheme of things where that fits in. But let's dig into this further and see if we can find out what's going on here and what's going to happen. So the stuff we want is pricier. Things like bicycles, medical care. People weren't going to get gyms. They want to exercise, so they buy bicycles. We know what happened in medical care with all the people in the hospitals with the pandemic. Newspapers, cable TV, the Netflix just went wild with people staying at home, recreational books, food at home, cleaning products, rent of home. All these things went up. We saw a lot of increases in the price of building materials as maybe people want to add on offices to their houses, stay put and do some additions, do some improvements. Those things went up, and then the supply went down because the manufacturing of building material went to a standstill because the factories were shut down. So we had those things all falling into place. But there's also deflation in certain areas of the economy of things that weren't in high demand. Food at school or work, shoes. You're not walking around as much if you're staying at home. City transport, buses and so on. Hotels, women's dresses, men's suits and jackets. What's going to happen to that industry? Airline fares, as the demand for travel went way, way, way down. And that may continue with the advent of Zoom meetings. And now people are used to these Zoom meetings. There's going to be a lot less flying, they say, a lot less business travel. Let's look way back and get a big helicopter view at the historical. See, this is up to 1650, so I want to uncover that from my picture for a minute. So this is back to 1650. Look what happened here back in the late 1600s, it looks like, or 1700s. We had some pretty hairy inflation there. What about 1740 or so? We had inflation like 35, 38%. This is looking way back. Some huge inflation there, almost 30% between 1750 and 1800. We had huge inflation here. Now let's see what happened here. In 1918, we had two things happen. We had World War I ending in 1918. Then in 1918, we had the Spanish flu pandemic. In the Spanish flu pandemic, both of my great-grandparents were killed. That one killed young people, and it killed people in their 20s with the strongest immune system because it turned the immune system against itself and made the immune system attack healthy cells. So my great-grandparents in their 20s were both killed by this thing, and my grandfather grew up an orphan. He had to move in with his uncle who didn't treat him very well and so on. So this really affected the family years ago. And we see the end of World War II here. This is what started the baby boomer generation. When people came back from the war and started having babies and spending money and buying houses, huge surges of inflation there. And as we look here, when we went off the gold standard in the 70s, look what happened here. This little blip from the 2008 global financial crisis. And now here we are today with this little thing going on here. Okay, let's look at a couple things. First, we'll look at wars and how they affect inflation. And then we'll look at pandemics historically and how this will likely play out today. Okay, so let's go ahead and take a look at the data. At the end of wars, here's the average start date and median start date for wars. Here's the end of the average war, and here's what happens to inflation after soldiers get back from the war and they come back and they're spending money and they're having babies. You can see quite an uptick in inflation after the end of wars historically. Okay, so wars definitely affect inflation. After the end of a war, there's going to be some massive inflation in most cases. Let's see what happens in the aftermath of pandemics. Here's the average start date of a pandemic, the median start date, the average end date. Look what happens to inflation here. Okay, let's go ahead and not much. In other words, just a blip on the radar screen. Hey, because people are still home. They're still together with their families. They're still with their loved ones, and they're still spending money, but they're spending on a little bit different things, but they're still spending. Like we see the mix of inflation in some sectors and deflation in other sectors kind of cancel each other out. Now let's go ahead and lay these two things against each other and see what happens. At the end of a war, here's what happens to inflation. At the end of a pandemic, here's what happens to inflation. See, there's not much. It's kind of a blip. Look at the drastic difference in inflation between wars and pandemics. And let's go ahead and take a look at bond yields, what happens at the end of wars and pandemics. Bond yields, by the way, affect interest rates, mortgage rates, and so on in your house. So at the end of wars, we see this decrease in bond rates, but we don't see much of an effect that pandemics have on bond rates. So, will inflation eat us alive and kill our stock market returns? Well, I can't say for sure, but looking back at years of history, the inflation as a result of coming back from a pandemic has historically been a ripple and not a tidal wave. So I wouldn't push that panic button and dig that bomb shelter just yet. And hey, don't take this as investment advice. After all, I'm just some guy on YouTube. But the data shows in all likelihood we'll be just fine. I hope you enjoyed this research and my perspective on the matter. Please click like, subscribe, and share this video. Thanks for watching. This is The Business Guy.